Okay, everyone. Nice to be back. Sort of nice to be back. So, challenge over. As disappointing as it sounds, there are lessons to be learned. As you know, we had a $500 to $5,000 challenge. Yeah, we basically got wrecked. Let's talk about what happened. So, as you know, we just made a really nice trade to the downside. We just got off the news of the CPI and the core CPI, which went massively in our favour. We took about $300, which took us to about $928 or $22. So we were well on our way, nearly doubling up our account size. And then, yeah, I mean, this just completely ripped. We'll look into what caused that rip. Ultimately, I was stupid. As traders, I think what you need to always do is once you've got in on a trade and been successful, you should take a beat, relax a little bit, don't dive straight in, don't try and overtrade. In hindsight, which is always an easy thing, it's like, well, it was probably, you could probably see that, it was predicted. I mean, we'd had this sell-off for a good 8 days, maybe even more, right down to this point. If we go, we're on the 4-hour time frame at the moment. If we look at this in a more macro environment, I mean, let's just draw some lines. How many times this has bounced and reverted back. Let's do another one. Each time we've hit these lines, we've had a massive rally. You know, it's hit here, it's come in. It's hit here, come in, or even down to this 18.2, reverted back up. Now, let me just zoom in a little bit more. So it's kind of like, well, why should now be any different? You know what I mean? It's like, well, these are the things that now it's easy to look back and go, yeah, really, I should have maybe saw that. Every time it's come and tagged 18.2 or 18.5, this is a really there's a lot of buying pressure around here. I had to check. One of the biggest mistakes is I hadn't spent too much time reviewing what the order flow looked like in Bookmap. I think at the time, for me, it's because I'm not a full day trader and I have a real job, which real job. It's not really the right way to say it, but I've got a normal day job which isn't financially based, and as a result, sometimes doesn't afford me the time that I'd like to be able to spend to kind of do these things. But yeah, each time we've came into these key levels, we've had a massive rally. So what I'd done is I'd done the set. I'd made that $300 win, which was quite pleased about. And then I should have just down tools and let the market breathe a little bit, let it catch up. We saw this continuation to the downside, and I thought, well, maybe we're going to go and check the 17.5 level, which is the recent all-time low. Not the all-time low, but at least the recent low that we've seen, or the bottom. And it's just done the exact same thing. It came down, tagged, the 18.2, and then just rallied up. I'd put a short. We'd gone past this point, and what I thought was going to happen is we were going to come back and retest this this triangle here. So which would have been resistance now turned, or what was previously support to turn resistance. So what I thought was potentially going to play out was it was going to go, okay, so we come down, we break through that resistance, we come back up, test the support, and then we go down for new lows. That wasn't the case. It's done what it's done for the past, however many times, and we got caught out. But ultimately, this is about a journal of trading discovery, understanding what I'm doing right and what I'm doing wrong, and now in hindsight, that wasn't the greatest thing to do. So I guess we're all human and we get blinded by greed. But I put an order in, a short order at 18,500, hoping that it'd come back, retest, and then go back down. But it just literally ripped through. I didn't have a stop. That was another failure by me. I should have had a 10% stop or maybe a 15% stop. And then it went kind of, reverted right, or retraced right the way back up. But there are lessons to be learned. Let me just make a couple of key points that we know how to make money. We had a couple of successful trades. So we certainly know how to make money. We know our entry levels are generally good. We just probably didn't use our risk management good enough. But that's all by the by now. So moving forward, then, is this the end? Well, it's the end of this challenge. But I am going to start a new challenge. Same again, $500. But this time, I'm going to play the risk game a little bit better. So the game on this one was to stick to 20% leverage. And I think overall that's probably too risky. A 20x leverage gives you about 1,000 point move. So you can get from 18,000 to 19,000 roughly. Yeah, depending on the market, you can get 1,000 point move on a 20x leverage, which normally you think, okay, that's a lot of movement, but clearly it happens, and we got tagged out. So the way I'm going to play this one is I'm going to stick to the 20x leverage, but each time I double up the account. So starting from $500, if I hit $1,000, at that point I'll then reduce down to 10% leverage. And then if I double up the account again, which would be $2,000, I will bring it down to 5% leverage. And then again, if I double that account to 4,000, I will go down to 2.5%. The reason I'm doing this is because the value that we would get back stays the same as a per point basis. Because what's happening is, although we're reducing by half in terms of the leverage, we're doubling up our account size each time. So in terms of the moves, the value per point will still be the same. It just means your risk level gets better. So it's kind of like, okay, well, I'll start risky because my account size is small. We don't want to lose, of course, but if we do lose, ultimately it's not the end of the world. It's just, well, we are where we are. So that's my plan. That's how I'm going to kind of approach this one. What I'm going to do, I'm going to close the chapter on the session. And then I'm going to create a separate playlist, which will be challenge 2. So the first challenge was challenge 1, failed miserably, and then we'll get into challenge 2. Now I do have some, a kind of a view on where we're going to come in and enter. I just want to go over what I think caused the rally before we kind of close this one out. Whilst the market and the CPI was completely negative, the earnings report told a completely different story from some of the big blue chips, and I think that was at least one of the catalysts to the rally. So let's just dive over and have a little look at some of the earnings to see what we've seen. So, if you look at what was expected on some of these earnings, so this is. If it's positive, it's better than expected. If it's negative, it's obviously worse than expected. So this was yesterday, Thursday. So we had Walgreens came in much better than expected, plus 3.76%. So that was, they expected 0.77, coming at 0.8. BlackRock, huge company. They estimated 7.07, came in at 9.55. Huge 35.1% increase on what they thought. Paramount, again, expected negative 0.3, came in at negative 0.2, so they expected a slight loss. but actually they came in a little bit better than that by 0.001 point. And the story's there. Taiwan Semiconductors, big increase on what they expected. Commercial Metals, Washington Fed, Loop Industries, and we can go on. But these big blue chip companies, clearly they've you've seen a lot more green than red. So clearly, what's strange is it's not really affected earnings, which was essentially for me the catalyst as to why we had that uptick. Now we've got some huge earnings in the calendar today, so let's have a look what they look like. We've already had a good one for Blade Air, but we've got let's see if we can see any. We've got Beyond Springs. No, I'm too fussed about that. Sorry. Let me just put that back up again. Just seeing if we've got multiple numbers. US Bank Corp. If I just go let's see. Let's look at the Nasdaq. Then we've got JP Morgan, which is huge. Ultimately, what I think is if we see some better than expected earnings, I think the rally will continue. Yeah, we've got JP Morgan, we've got Wells Fargo, we've got Morgan Stanley, Citigroup, US Bank Corp, First Republic Bank. These are all huge. So if these come in better than expected, then yeah, I think the rally will continue. So let's focus back onto the charts a second. Actually, no, do you know what? I'm going to leave it here, and I'm going to save the kind of what I'm doing for the next challenge to the next video. So I just want to give an update just as to where we are. Yeah, we are down and out on our first challenge. We've restocked back to $500. We take this one with a pinch of salt. We could have done better. We could have had some. We could have looked at how we can basically stop the rot, but we didn't. Silly move. But we've got to learn. We've got to learn from this. We've got to take the failures as ways to learn and become better traders. So that's the whole premise of what the whole YouTube video, the series, and ultimately what the challenge is about. I think transparency is key. I did say, but what people say oftentimes that majority of traders, I think it's 95% the stat, essentially become exit liquidity for the big boys. So we're trying to prove that that's not the case. However, on this one, we failed. Okay, so I think with that being said, let's jump off this one and then I'll jump into the next one. Peace out, brethren.